demand zone, it goes up and then it goes down. Oh, it's a demand zone. Now we got to get that bounce. It goes up, it goes down. Oh, it's a demand zone. It goes up, then it goes down, right? So I don't want you guys to get so confused. And how you doing, everybody? I hope you're all doing great. I hope you all had an amazing trading week. Today we're going to go over supply and demand zones, right? This video will be the only supply and demand zone video you will ever need. I promise you that. So let's get right to it, right? The best part about this is it works on every time frame, okay? So let's go to BA here, right? Basically, what we want to do is go to our daily, right? Any time frame, you say 2 hours. I don't want you guys to be like, oh, he already worked on this. No, right? So what do we have here? Okay, let's go right here. We have our price going down, right? Up, down, down, right? You guys see that? Okay, we'll keep going lower and lower, right? That is the structure within that. If you guys have not seen my video on structure, I have a video on structure, so I explain that. So what does this mean? You can see the structure from within here to there, right? So what we're going to do is we're going to wait, right? This will be our blue. We can take this out. I just want to show you guys that we can take this out, becoming our structure. Structure meaning this will be our entry. This from the top right here, be measuring that. I'll take out the box just real quick so you guys see what I'm talking about. I'm thinning that out, right? So this, make this black. This, from this structure, from this high to this low, will be our entire play. From this high to this low will be our entire play. So imagine, so for example, I was going to say imagine. For example, you are going to be on puts. So your entry will be from here all the way to here, right? And your exit will, if you're in calls, you'll take calls all the way here to there, and that will be your exit, right? Vice versa. So we have that structure within that. So now what do? Where's the good part? Where's the supply and demand zone? So we look for that previous short where the market tremendously fell, which is around here, right? So we create that as a supply and demand zone. You guys see that? This might be actually a beautiful setup, right? We can stretch that all the way to here, right? We just stretch that all the way as long as we need to, okay? So we just wait for price to come up there. Oops, we moved it a little bit. I just want to clarify how I got the zone. So basically what I did was, once I have that structure, I look for that move down where the price tremendously moved down, right? That last move down, which is that candlestick right there. I measured, right? That candlestick right here. This candlestick. Move that right there, right? After you went to that price, the price tremendously just moved down, right? So what you could do is you can just put your price alerted right here, create alert, and boom. So once the price, right, we have an alert right there. So once the price comes up to this price, you can just wait for that setup and just wait for that UTAD, right? Just wait for that UTAD where the price goes up right here, liquidate everybody, and just tremendously keep going down lower, right? So what else we got here, right? And this, the best part about it, this works on any time frame. So let's say you have a structure here. You have a structure here within here, right? We have an efficiency in the market, an imbalance. If you have not watched my video on imbalance, I have a video here on imbalance. Hope it hasn't posted yet, but I have a video here on imbalance, right? It should be posted right. This video is done. So this the last down move, tremendous down move was in this zone right here, right? Measuring that first candlestick. Is it here? Right about to that wick, right? So what I did was I just basically measured this candlestick, this entire candlestick, because that itself, it is a supply zone, right? It's an imbalance. Oops, I moved it. Sorry guys, let me make this blue just for, I make this blue because the blue in my videos will be the structure, right? So what do we have here? Do we have a confirmation within this trade? Yes, it actually just kissed our supply zone. As you guys can see, literally just touched the wick. So what do we have here? We can have that green. The green meaning this play itself, right? This play itself, meaning once the price went down, it went all the way up, and we can go to our lower time frame, which is a rule of 30, right? To our lower time frame. I know it's loading. Guys, I apologize for the load. It's my internet is kind of low because there's a storm going on, so I think it's affecting my connection. But anyway, as you guys can see right here, once we find that structure, right? Once we find that structure, once all right, I'm sorry about that, you guys. Once we find that structure, right? We find that structure, we look for that zone. Hang on. We look for that zone. Should make it red, right? And we want price to come up. We want price to come up to that zone, whatever it does, consolidate. We want price to come up. Wait for that confirmation from a Wyckoff distribution. And then once we get that confirmation in the lower time frame, we take it all the way down. Right? That's exactly what we're trying to do, and that's how we get the perfect supply and demand zone, right? And I'm going to show you why I say perfect. Just stick to this to the end of this video, and I'll explain why. So yes, we went from 2 hours to the rule of 30, meaning 5 minutes if you've seen past of my video. So we went from 2 hours, and we get our entries and exit in the lower time frame, right? In this scenario, we have 145 in the lower time frame. We have that structure right from here. So our target will be, our exit on puts will be 145, 160 to 145. Beautiful play. Once we get that confirmation, we go to a lower time frame. Let's find that. Let's see. I don't want to be biased here. You'd be like, oh, you already seen everything, so everything's gonna work out. Yes, I did, but this is a random stock. So once we have right here, we have BA, right? So we take our entry right here. We have that PSY text, right? PSY, preliminary support, right? Preliminary support. We have that UT, right? The up thrust. And then we have, is that UT? Yep. And then we have this UTAD right here, liquidating every single position that we had. If you do not know what I'm talking about, liquidate, we have a market. We have what am I trying to say here? If you have not seen my liquidation video, I have liquidation right here. Just watch it and you understand what I'm talking about. So once we have that manipulation, we have that manipulation or liquidation, right? We're gonna see a tremendous fall in the market. Right, we got price consolidating. Let's add one more here. Got that ripped up, right? Boom. So what does that mean? It means once we have the price consolidating in a certain area, right? As you can have here, we see here, we have price consolidating in a certain area. We have that UTAD up thrust, we have the UT and then the UTAD, the up thrust after distribution, meaning that there's a lot of orders here. So we have individuals that are in puts, they have their stop losses here and stop sells. And then we have individuals that are taking longs. They're very happy because they have their position here, their stop sells. So there's a lot of orders within the side. So what happened is the composite man starts to manipulate the market, grabbing all that liquidity, all that stop orders, stop sells, stop losses. They grab all that and then bring the market all the way down. And for those who took calls, grabbing all that liquidation, it just keeps going down and down. And that's exactly what we have here. Right, we have a perfect example here on BA. So our price target was from that one. from that entry right here. So after the UTAD, kind of got tongue twisted there, brain freeze, right? UTAD, right? This is our stop loss right here. You can take that as stop loss because that's when we got a confirmation to that entry. And then we have that target from 145, right? And we just let our play run, right? Did we get a confirmation? Yes, we did. So we got that entry. We let our play run. We left it alone. We got our play right here, right? That's a beautiful play, you guys, from 150 around this 150 area, 150 to 145. That's a beautiful. This price actually went to 141, and it just kept. Let's see what happened on a higher time frame, right? 151, and we have a lot of liquidation, right? Liquidation, boom, right? Liquidate, right? We have to liquidate, and now I do see BA going back to 113. You heard it here first, you guys. It's at 127. I do see here going to 113. Okay, so what does this mean? If you stuck to the end, so now we have individuals here. We have retail traders going like this, right? Check this out. Give me a sec. Let me delete this real quick for us. So now you have retail traders saying that, hey, we have a demand zone here, so the price should be bouncing. We have a demand zone here, the price should be bouncing. We have a demand zone here, definitely bouncing because it bounced here multiple times, right? And if you're part of my community, I teach you guys not to trade like the pajama stripe traders, meaning that you have so much, you have so much zones where you're so distracted from your current trading plan because you think the price will bounce, right? But if you understand liquidity, before this run up happened, the composite man manipulated the structure right here, right? We had a Wyckoff accumulation, giving us that spring of breaking the structure and bringing the price extremely high. So when the composite man had a position, they were down on their position. They're probably down negative 10 billion or negative 20 million. The more this price go up, the more they are down on their position here. So what they have to do is they have to liquidate position. So what am I trying to get at here? So you have individual here trying to confuse the market, so confused from the market, like, okay, we have to bounce. Next thing you know, they take calls, they're up, happy for the moment, boom, market goes down. Oh, we have a demand zone going up, going down. Every time they get into a play, thinking that is their zone, it keeps on breaking below it. It never holds, right? And that's because it's liquidity. So now, let's draw a schematic here. So now, what's going on here is actually this, right? It's actually this. This is what's going on here, right? Let's make this black so you guys can see what I'm talking about, right? So now, where will your SND, your supply and demand zone will be, right? So what your setup is going to be this, right? This is going to be your supply zone, right? Boom, supply zone, boom, supply zone, boom. You guys see that? And you're just literally waiting for price to come up. Yes. So you have that. This can be your blue. This can be your structure right here, blue. Your structure. If you have not seen my structure video, I have that on there. We're gonna have it on there. But this is exactly what you're drawing. So on a bigger schematic, right? On a bigger schematic, this is what's going on. Right? You have a higher high. Right? You have that UTAD, you have a 4 on the market. This is what's going on here. So in a bullish market, I want to make this black so I don't want to confuse anybody with the color. So in a bullish market, what do we have here? We have price. This will become our demand zone, right? Become our demand zone. This will become our demand zone, right? So what's going on is basically we want the price to go down here, right? Okay, I guess that example didn't work out, but it's okay, right? I'm sorry, you guys. Let me do it over. I want to make sure you guys get this. This is very, very important. Very, very important. Right? Very, very, very important. I'm just drawing a perfect schematic first. I want to make sure we get this. It's very, very good. I want to make sure I get it perfectly as best way possible I can explain this. Because once you guys learn this, I promise you, you guys will like, wow, now it makes so much sense. So in a bullish time frame, you have prices going up here. So you look for that structure, you wait for that move up, and this will be your demand zone. Right? Boom. This will be your demand zone. Okay? Well, technically, you're waiting for that price to come up. You want the price to come up here to go even higher. And then on the other side, which is your supply zone, which is that liquidation of those lows, right? That's why I don't want you guys to be pajama traders. So now we have to liquidate this. This will become, this demand zone will become supply zone, right? We got to liquidate that. So that's when you see those bounces, and then you see an even sharper fall. What's happening there? You're having a liquidation. Liquidation. If you have not once again seen my video, it's right here. Liquidation is just saying where does the most order lie in the market? The most orders from the composite man lies in the market right here. Right in this high, right? And to this low that we created, right? That we perfectly created. I know the example was not the best example, but I know some of you guys like, okay, that makes sense, right? Look at that, you guys, right there. So it's from this low to this high. Now our play is going to be from the put side is from this high all the way to this low. That will be your target. So if you take an entry here, right? So this will be your zone, right? This is your structure. Take that out, just not confuse anybody. This will be blue, right? Our structure is always blue, so you don't get confused. Structure is blue. You have that last sharp fall down, right? Boom, last sharp fall down. You have that supply zone. So what you did was you waited to go all the way down, waited for the price to come up. Once you hit that supply zone, you take that in the form of Wyckoff, right? It's our green form of Wyckoff distribution because we are in a downtrend. So what you should be doing is you should not be forcing any trades trying to go long in a bear market. Can you make money? Can you make money? Can you make money on calls while you're in a bear market? Absolutely, but you do not want to shoot yourself. You don't want to set yourself up in the. Hang on. You don't want to set yourself up for success or shoot yourself in the foot by doing that, right? That's going against the trend is going to make it more difficult for you. So you see here, you have that downfall, waited for the price to go back up to our zone, to our supply zone. We have it in a form of Wyckoff, a transfer of weak hands to strong hands, and we take that even lower to the next low, which is here. I hope that made sense, right? Let's look for another example here. I have here Disney. I think I have over my team. Right, I have here Disney. I have these little lines because I told them, hey, listen, Disney is gonna go full all the way to our to around this 99 area, and you can see Disney going to 90. Right now it's at 95. We have to liquidate all this position. So this is what happened here. Demand zone. Last move up. Excellent. Right. We have that move up, move up, move up. Boom. Now liquidating all that move up. Composite man trying to get his position back, trying to break even. Boom. Once he breaks even, it's gonna accumulate. It's gonna create that spring. If you don't know what I'm talking about, I have a video on my channel right here on Wyckoff accumulation. Instead of the distribution on the bear side, now we're looking to get bullish and liquidate every single position. Right? Go up, liquidate that. Now everybody's like, what does it matter? It's a supply zone. Why is it not going down? It's not going down. Okay, it's going down. I'm gonna take short. Once take short, it goes up. All right, this is definitely gotta go down now. It's super extended. Next thing you know, it goes down. Boom. right? Liquidate, creating that new high. The composite man taking all their position, breaking even on their position, and just everybody's like, what the hell just happened? I blew my account for the 20th time. Well, this is what's going on right here, right? Guys, I hope you understand that. I hope you break that down. I know I went with some crazy example that did not make sense, but once you understand and see what I'm talking about, your supply and demand zone become more simpler. And one more tip is that how do you know you have a great supply zone? You have an imbalance in the market. That imbalance meaning that the composite man went into the play so fast that everybody could not get into their position because they dumped so many money, so much money, so their footprint was left behind. So there's a whole entire imbalance of the market that needs to be mitigated. Mitigated means that it's a risk reduce of what? It's reducing the imbalance. So they're trying to make it balanced, right? But I have a video on the imbalance of the market, so just watch that video. It should be coming out by the time this video comes out because it is scheduled. But once that video comes out, just watch and everything will make sense. The more supply and demand zone itself is good, about 40, I'll say 40, about 60 to 65%. But once you put it included with the imbalance and fragility in the market, it becomes 60% all the way to 95%, and that becomes more accurate. Along with the liquidity, which makes it even higher, more higher, right? So guys, that is my video for you on SND. I hope that helped you guys. I want to keep it simple, straight to the point. Please, please, please rewatch this video and soon it will click. Thank you so much for staying this long, you guys. Enjoy the rest of your day. Peace.